After the crash of 2018, many people thought Bitcoin was dead. Again, the headlines mocked it. Bitcoin bubble bursts. Crypto is over. Investors fled. Scammers disappeared. Interest faded. It was what some called the crypto winter. But underground, something was building. Developers kept working. Builders kept building. And in the background, powerful institutions were starting to pay attention. While the world was distracted, Bitcoin was evolving. Then came 2020, the year that changed everything. A global pandemic swept across the world. Businesses shut down, markets crashed. Fear spread everywhere. And in response, governments did the only thing they could: print money. Trillions of dollars were injected into the economy overnight. Central banks dropped interest rates to zero. Stimulus checks were sent out like candy. At first, people didn't think about it. But then they started asking questions. Where does this money come from? What happens when we just create trillions out of thin air? Can fiat currency fail? That's when people started looking at Bitcoin again. Because Bitcoin doesn't print more when things go bad. It doesn't have a central bank. It doesn't have inflation built in. It has a hard limit, 21 million coins. And that limit started to matter. 2020 became a turning point. Big names started entering the space. Paul Tudor Jones, one of the most respected hedge fund managers in the world, called Bitcoin the fastest horse in the race against inflation. That shocked traditional finance. Then came MicroStrategy, a publicly traded company that announced it had converted over $400 million of its cash reserves into Bitcoin. Their CEO, Michael Saylor, became one of the loudest and most passionate Bitcoin supporters in the world. Other companies followed. Square, led by Jack Dorsey, bought Bitcoin. Tesla, led by Elon Musk, bought Bitcoin. Yes, Elon Musk. One tweet from him could shake the markets. In February 2021, Tesla revealed it had purchased $1.5 billion in Bitcoin and would accept it as payment. Bitcoin's price exploded. It hit $50,000, then $60,000. Suddenly, Bitcoin wasn't just some fringe asset. It was on the balance sheets of major corporations. It was being talked about in boardrooms, on CNBC, and even in government hearings. This was no longer a joke. This was real. And it wasn't just about price. The infrastructure was maturing. Major banks began offering Bitcoin custody. Investment giants like Fidelity and BlackRock entered the space. Bitcoin ETFs were launched in Canada, then in the US. It was the moment Bitcoin stepped out of the shadows and onto Wall Street. But with growth came new challenges. Environmental concerns started gaining attention. Critics pointed out Bitcoin's energy use. News reports claimed Bitcoin was boiling the oceans. Activists raised alarms about coal-powered mining operations in China. Bitcoin's reputation took a hit. Elon Musk, just months after buying Bitcoin, announced that Tesla would stop accepting it over environmental concerns. The market tanked. Once again, Bitcoin was under pressure. But the community responded. Miners began migrating to cleaner energy sources. Entire mining farms moved from China to North America, where they could use hydro, solar, and wind power. Even with the volatility, Bitcoin kept growing stronger. Then, in late 2021, it happened. Bitcoin hit a new all-time high, $69,000. For early believers, it was a victory lap. But this wasn't the end of the road. Bitcoin was no longer just a currency or an investment. It was becoming a movement, a symbol of freedom, sovereignty, and resistance against centralized control. And while the price would go up and down, as it always does, something more important had changed. The world was now paying attention. Bitcoin was no longer an outsider. It was at the table. And the fight for the future of money had truly begun. If you believe in financial freedom, smash that like button. Subscribe for the next chapter of the Bitcoin story. It's only getting more intense from here. Let me know when you're ready for part 5.